Hey, what's up, PharMore Money family? Welcome back to another video. Today we're going to be talking about GE General Electric and its future up ahead. Obviously, they had earnings a few weeks ago. Market kind of came off of earnings news very unimpressed in total, right, from their first quarter earnings. Results were mixed in general, but it's also a case of GE performing right where it could. They continue to face difficult market conditions, especially in like the aviation sector. Basically, based off of that, it's going to be a little difficult as it moves forward. But guys, the best part about it is that when commercial air travel picks up globally, and it should here soon, it's going to position this company so well to take advantage from that standpoint. Not to mention that it also has its tentacles in the healthcare sector, renewable energy. That's a big front for it, and especially with the Biden administration doing a ton of grants and just a whole lot of focus being based on renewable energy. They're going to be primed to have a nice run. Citibank already came out and said that GE in total could see a 30% upside over this next year. So, this is great news from that standpoint. Oppenheimer came out and also rated it as a buy, which is huge. So we're going to dive in a little bit into this video and just kind of dig into some of the financials, see where free cash flow stands, kind of where the future is headed for General Electric over this next year and even over the next 5 years. Stock price currently is sitting at $12 as of market close today. Ticker symbol is GE. Let's dive in. So from an overall perspective, GE basically came out and stated that, overall they had solid first quarter results that sets them up well to deliver on their 2021 commitments. They're transforming to a more focused, simpler, stronger industrial company, driving profitable growth and value for the long term. They've got positions to capture strategic opportunities and build a sustainable future, which we'll be talking about in a little bit in regards to the renewable energy piece. They're also going to be serving customers in vital global markets with strong service capabilities, as well as a focus on growth, profit, and cash generation as well. Building a world that works, strengthening GE for the long term. And I think that's the key piece from the entire presentation, just reviewing it and even listening to their earnings call, is the fact that they're talking about the future. And I think that's the key piece that we have to focus on, is not the now or tomorrow, but where are they going to be at 10 years from now? And they're viable, guys. I mean, this company, I know it's gone through the dumps and it's, taken quite a beating in the stock market, but, it's a bargain right now, especially with the fact that they're expanding their renewable energy sector even more so. And aviation is going to come back roaring, as I already said, with, the mandates kind of lessening as we move forward, especially because of the vaccine. Healthcare is another piece as well. From a lot of the equipment that they make is gonna skyrocket as well, from all the medical procedures that maybe people put them off for reasons due to COVID or whatever the case was over the past year. So they're gonna see a ton of positive news and growth from the overall standpoint. Let's keep going and talk about their quarter one financials. So just a quick little snapshot of their quarter one financials, right? Adjusted, or margin expansion was 110 basis points. Adjusted earnings per share came in at 0.03. Organic top line is still being pressured, but healthcare strength is more than offset by aviation. So that's something to note. Adjusted GE industrial margins of 5.1% were in part due to organic expansion in power, renewable energy, and healthcare. And then the fact that GE industrial free cash flow was up $1.7 billion year over year is just absolutely outstanding, guys. Their second quarter industrial free cash flow is expected to also show similar year-over-year improvement as the first quarter. They're going to be monitoring the aviation market trends, but still, overall, solid first quarter results that are only setting them up to deliver and possibly even over-deliver on their 2021 commitments. Let's continue on. So one of the key trends or metrics to follow in the aviation sector is the spares rate. And GE's aviation line did not come out with the results that I think most analysts out there or people in general, expected, right, from that standpoint. We knew they took a giant bloodbath based on COVID and everything else that continued on, right, over the last year and more. Overall, though, right, there's nothing GE could have done about the timing of the recovery in commercial air travel. So that demand for aviation spares went down as well. And that clearly shows on this bar graph in front of you, the Q1 2021, bar chart. It's just nothing to, to look at from that standpoint. But management has a lot more control over their costs now, which is a great thing. The good news is that the aviation segment margin was about 13%. That's a good thing. Given the weakness in the entire quarter, so Q1 quarter, the fact that GE's full year guidance for segment margin is for low double digits, that's absolutely incredible. The first quarter margin implies that GE could beat its full year margin guidance if the market comes back, which, guys, the market will definitely come back for the aviation sector. We're already starting to see a lot of, the bank stocks, the recovery stocks, the cruise line stocks, the aviation stocks in general gain momentum based on, travel right now. More than ever, everybody is getting on a plane and going somewhere either warm or fun just to get away from kind of what we've gone through over the last year. So from that standpoint, very disappointing spares rate numbers, but overall, look ahead and think about the future, guys. And the fact that they're still able to come in with double-digit margins, I think that's the key, right, piece to it. So let's focus on where GE goes from here, and I think it's only on the up and up. So, PharMore Money family, the next segment that I'm going to talk about is going to be the power and renewable energy segment, right? So, but more often than not, when you talk about GE, the segment of aviation and then power renewable energy are often discussed together. And that's exactly what they did on the quarter one earnings call as well. Management aims to increase profit margin and get them as close as possible to their peers or the trend line. GE's combination of wind power and gas power, right, means it gives investors exposure to two of the most cost-effective ways to generate electricity. As such, GE is one of the best stocks in the renewable energy sector from my standpoint. Regarding their immediate plans for the renewable energy sector and power sector, CFO Carolina Happ put it best during the earnings call. She basically said power declined and renewables were roughly flat. These were largely driven by our increased focus on profitable growth. Examples include reducing turnkey scope in gas power, exiting new coal in power portfolio, and increasing project selectivity in renewables. Basically, the chart that you have that I've shown in front of you guys shows how power and renewable energy margin have expanded on a year-over-year basis for the last 3 quarters, which is absolutely incredible to think that was all during COVID and coming out of it, right? And not to say that we're out of COVID by any means possible, but just the fact that they came out of that with still some incredible margins. Diebeck Happ also outlined that GE's adjusted industrial margin expanded from 4% to 5.1%. Basically, it's equivalent to about 110 basis points on a year-over-year basis. And that was up overall 400 basis points if you just exclude the aviation sector. So overall, just phenomenal upside for their power and energy segment. The area where GE has the most upside potential in total is still in the power sector. They had double-digit revenue growth and significant margin expansion from that standpoint as well. So just absolutely unique aspects to take a look at and see the fact that both renewable energy and power had some massive margin growth from that standpoint. And I look forward to seeing it run up to 1,000 basis points from that standpoint and even go bigger over, the next quarter or the next earnings call. So very exciting stuff. So, PharMore Money family, last segment we're going to talk about today in this video is the GE Healthcare segment. This is probably the least talked about GE business, but definitely the most intriguing as we move forward in 2021. Management's full year guidance calls for low to mid-single digit organic revenue growth and organic margin expansion of 25 basis points to 75 basis points. However, in the first quarter alone, margins expanded 270 basis points on an organic basis. Revenue was up 7% organically, and orders were up 5% organically. This has a lot to do with the fact that Beginning of this year, we started seeing more routine procedures, non-invasive procedures being utilized and, taken care of by patients. And, those availabilities became a little bit more open as well from doctors and healthcare systems and hospital systems. Culp said that, and Culp's CEO said that core imaging and ultrasound orders were up 20% as healthcare bodies start to make capital expenditures on non-COVID related equipment again. It all points to the healthcare segment having a strong year. Interestingly, Culp outlined that he was willing to sacrifice some margin in 2021 to make investments in the business to drive growth in the future. As such, it's possible GE could meet its full year targets and invest in increasing growth in the future. The key takeaway, guys, is that the first quarter was all about margin. Aviation was weaker than many expected, but commercial air travel will surely recover in time, and GE is very well positioned. Meanwhile, there's also some real progress on margin in other segments, plus a strengthening growth profile in healthcare, which bodes extremely well for GE. GE continues to stand well above shoulders for 2021, and I can't wait to see its run up in the stock market as we move forward. This is going to be a stock that I'm telling you, it pays a nice little dividend. It's got nothing but upside from where it's been in the bottom of the basement. So tons to look forward to as we move forward in 2021 with GE. If you've enjoyed this video, if you did, please go ahead and hit the like button and please do subscribe. Turn on your notifications as videos are going to continue to pour in as we move forward through 2021. This is going to be the road and journey to wealth and to just massive portfolio returns as we move forward. Thanks, everyone.